Guest is Jeremy Kronick. He's Associate VP and Director of the Center of Financial and Monetary Policy at the CD Howe Institute. And our featured guest of the morning is Brooke Thackeray, Research Analyst at Horizons ETF Management Canada. Brooke will be with us for the full hour. Jeremy, thank you for joining us. You believe the bank may be waiting too long. Why?
Well, I think if you look at the macroeconomic conditions, I think there's a lot of evidence there that the economy is slowing. So unemployment's up, job vacancies are down, bankruptcies are up. We're seeing a normalization of corporate pricing behavior in terms of the frequency and the magnitude of the changes. And then if you look at so inflation, we usually look at year-over-year measures. But if you look at sort of the 3-month measures and you annualize those are even better than what we're seeing on the year-over-year numbers. If you strip out shelter costs, even the year-over-year numbers look pretty good. And also even the year-over-year numbers, the ones that are the headline numbers, have been coming down. So I think when you just add up all of those things, we just think it's time. And if monetary policy works with a lag, we know that. And that's what makes it really complicated. But we just think all those factors combined kind of outweigh some of the remaining concerns. And it was time to cut. But so we'll see what happens in June.
Well, my big concern is if they cut too early, because there's no U-turns. You can't just all of a sudden pull a U-turn. And I think that my concern is on the inflation side. Yes, the economy is just stuttering along here. Unemployment's ticking a little high. It's 6.1%, which is at the lower end of the normal band. But if we take a look at the inflation and we take a look at the services inflation in Canada, that's still above 4%. That's a sticky side. If we take a look at the average wage earnings growth on a weekly basis, on a year-over-year basis, I should say, that's 3.9%. It's been there for a while. That's, once again, the sticky side of inflation. And the risk is if they cut too early that they could actually, all of a sudden, that could reignite. What do you think of the chances of that? Or do you think those elements are going to come down?
So I do think those elements are going to come down, but you're absolutely right. Look, I mean, like I said, because monetary policy works with a lag, there is an element of guessing, right? I mean, it's educated guessing, and modeling and taking a look at where you think all these variables are going to work together to sort of land. So it's understandable that they didn't, right? That they're hesitant to cut and reignite inflation. That it's the first time many of us saw inflation above 2%. We don't want to go back there. So it's understandable that they didn't cut. And so there's not really I'm not here to make a sort of counter argument against that. Those are real factors, as is the housing market, as is fiscal spending that we just saw all the provincial budget, or many of the provincial budgets, and I expect the federal budget to do the same, to increase spending. So it's just, when you combine those with the other things, where do you net out on these things? And for me, I net out on a cut, because I think the longer you hold it there, if you overshoot in the other direction, right, that's when you need to cut, faster to make up the difference. Kind of like what happened on the other side when we fell behind with the increases, and then we had to move super fast. So I think there's an element of judgment. So I don't want this to sound at all like a criticism. It's an element of judgment, and I agree that the data on both sides, there's data on both sides if you want to make the case.
Talk to us more about fiscal spending. The CD Howe Institute has some strong views on governments and fiscal spending, and has made the point, I think, over the past year or two, that fiscal spending at the provincial level and the federal level has contributed to inflation. What would be the consequence of continued inflation, deficit-style spending by governments in Canada, again at the provincial and federal levels, and lower interest rates?
Yeah, so I think we want to separate the different kinds of deficit spending, right? You can go into deficit because tax revenues come in below expectation, and that's not inflationary. But that's not what we're seeing, right? So the deficit spending that we're seeing is increases in spending, right? And a lot of that spending, some of it is investment-like spending, which is good for the future, but some of it is consumption-like spending, and that kind of spending is inflationary. And again, in an environment where you are already in an inflationary situation, obviously that's just going to add more fuel to the fire. And so, and the governor and other economists have made this point that when an economy is operating at its potential or exceeding that, or when the demand exceeds that potential, which it has for much of the last 2 years, that's when you want your government to pull back a little bit, right? We're not sitting in a place where there's a lot of economic slack and we need the government to fill it, right? Or governments to fill it. And so that's why I think we've made the call.
Yeah, if we take a look, we've got the budget coming out next week as well, and that might give some clarity on this as well. I mean, the federal government's really making the job tough for the Bank of Canada, of course. This is a hard one to factor in on a go-forward basis. As far as interest rates go, as far as the bank, what the bank is actually having to pay with the high interest rates, does that have any impact on what the Bank of Canada is doing right now? Or what the government is having to pay as far as interest rates go on their debt?
Yeah, I don't think what the government is paying on its debt is factoring in necessarily to the Bank of Canada's decisions with respect to what to do with the overnight rate. I think the question kind of goes back to what I was saying earlier about whether this type of spending that's coming from governments is inflationary or not. And I think it's clear that it is. Now, we don't know what's going to come out in the federal budget. The federal government has said that they're aware of these concerns. So we'll have to see what kind of spending they do, right? Again, because the kind of it matters, where you do it, when you do it, whether it's productivity enhancing, whether it's increasing the productive capacity of your economy, right? Because if you are increasing the productive capacity of your economy, there's more room for the demand side to increase as well, right? To keep things in balance. So I think we'll have to see. I think for the Bank of Canada, the concern is entirely about what it means for inflation.